They say no single man can control a nation's money. No individual can dictate the fate of Wall Street. No private banker can decide whether entire industries live or die. But what if I told you that, for a brief period in American history, this wasn't just possible, it was real? What if there was a man whose personal approval, not Congress, not the president, not any federal institution, was required before banks reopened, before companies survived, or before the country itself avoided economic collapse? A man who didn't run America, but ran the American economy. That man was John Pierpont Morgan, and for decades, he held a kind of power that no modern billionaire, not Bezos, not Musk, not even the heads of the world's largest banks could dream of possessing today. But how did he get this power? Why did the U.S. government allow it? And how did the Morgan dynasty shape the very financial system America still uses? Today, we uncover the hidden financial architecture behind J.P. Morgan's empire and the secret events that allowed one banker to control America's money. This is the story of the Morgans and how J.P. Morgan controlled America's financial destiny. America before Morgan, long before J.P. Morgan was a household name. America was a country without a real financial backbone. There was no Federal Reserve, no central authority stabilizing the currency, no government agency regulating banking, no emergency lender. The economy ran on trust, private deals, and scattered local banks, and without a unified financial system, one thing kept happening again and again: panics, crashes, bank runs. The country was growing rapidly: railroads, steel, oil, but money wasn't keeping up. By the mid-1800s, America was a financial Wild West. Speculation was rampant. Banks printed their own currencies. Trust came and went, like passing weather. Into this chaos was born a new kingmaker, not through royalty, not through government, but through credit. Because in a world where everyone needed money, the one who controlled money controlled everything. The House of Morgan begins the father who built the foundation before J.P. Morgan. There was Junius Spencer Morgan, a disciplined, serious banker working in London. He partnered with George Peabody, an American financier who had built trust across Europe. Peabody and Co. eventually became J.S. Morgan and Co., one of the most respected banks in the world. Its reputation, absolute stability, absolute reliability, absolute secrecy. Young Pierpont Morgan grew up watching this culture of power built not through speeches, but through controlled information, private deals, and quiet influence. By the time he stepped into finance, he understood one truth: if you become the lender of last resort, you become the master of every borrower. America had no central bank, so J.P. Morgan would become one. J.P. Morgan takes over America's money machine, controlling railroads in the late 1800s. Railroads were the beating heart of the U.S. economy. They connected cities, transported goods, built industries. They were also, ironically, complete disasters. Companies were badly managed. Owners fought each other. Tracks were duplicated. Rates were unstable. Investors were losing money. Customers were furious. Employees were striking. Everyone needed a solution. And into this chaos walked J.P. Morgan. He didn't invest. He forced fighting owners into meetings, locked doors, and refused to let anyone leave until they agreed on a unified plan. Stallits, restructuring, and strict financial discipline. Soon, he wasn't just financing railroads. He was controlling them. By the 1890s, Morgan influenced over 1/6 of the entire U.S. railroad mileage. But railroads were only the beginning. The billion-dollar masterstroke Morgan saw a bigger world come in the world of steel. And the key player was Andrew Carnegie, the self-made titan who had built a steel empire unmatched by anyone. Carnegie was brilliant, stubborn, and proud. Morgan was powerful, strategic, and calm, and the clash between them shaped American history. Carnegie had the factories. Morgan had the capital. Together, they could build something unprecedented. So Morgan bought Carnegie's entire company for $480 million, an unimaginable sum at the time. With that Moby, he created U.S. Steel, the first billion-dollar corporation in American history. For many, this was proof. J.P. Morgan wasn't just financing industry, he was constructing it. When Morgan became America's central bank, now we reach the moment that defines everything. The crisis begins in 1907. America faced a financial panic so severe that banks were collapsing overnight. Depositors lined the streets. Confidence evaporated. There was no Federal Reserve, no government plan, no safety net. The U.S. Treasury did nothing. The government was powerless. All eyes turned to one man, J.P. Morgan. And he rose to the moment. Morgan's secret meeting. Morgan summoned the heads of major banks, railroads, and trust companies. To his library, a dark, quiet room lined with bookshelves and guarded doors. He locked them inside. He demanded financial records, examined balance sheets, and decided personally who would survive. If Morgan said your bank was stable, you lived. If Morgan refused, you failed. No appeals, no courts, no government. One man decided the fate of the American financial system. This single event exposed a terrifying truth. America had no central bank, but it had J.P. Morgan. The turning point, the panic ended because Morgan forced stability back into the system. But the aftermath sparked a national debate. Should one private banker have that much power? The answer led to something monumental, the creation of the Federal Reserve System in 1913. It was, in many ways, an attempt to formalize what Morgan had been doing informally for decades. He had been America's central bank. Now the government wanted its own. The decline of Morgan power by the early 1900s. Things began to shift. 1. The Federal Reserve, the new central bank, diluted Morgan's influence. The government now had tools he once controlled alone. 2. Antitrust laws. The U.S. began breaking up monopolies, including companies Morgan built. 3. Public backlash. People were tired of money trusts. Morgan became a symbol of elite control. 4. His death. When J.P. Morgan died in 1913, newspapers were shocked to find his personal wealth was only $80 million, tiny compared to the power he held. It proved something people had never understood. His influence didn't come from money, it came from trust, fear, leverage, and centrality. J.P. Morgan's son lacked his father's ruthlessness. The Morgan Empire continued, but its peak was gone. Why the system still mirrors the Morgan era? Many believed that after Morgan, America had learned its lesson. But when we look at history, a pattern reappears. 1929, stock market crash, the Fed hesitated. Banks collapsed. Morgan influence was gone, but the system was still unstable. 2008, financial crisis. Lehman Brothers collapsed. Markets froze. The government had to bail out banks just like Morgan once did. 2020 pandemic crash, markets crashed. Massive emergency liquidity injected a modern version of Morgan's crisis management. The irony? America tried to replace Morgan with a system, but the system often behaves exactly like him. Emergency interventions. Central authority, decisions behind closed doors. Power concentrated in a handful of institutions. It's the same story, with different characters. Who controls America's money today? Of course, no single person today has Morgan's power, but the structure he created still exists, only expanded and digital. Today's equivalents are the Federal Reserve, the most powerful financial entity on earth. BlackRock controls more money than entire countries. J.P. Morgan Chase, the modern descendant of the Morgan Bank, now the largest bank in America. Tech giants and data firms who control digital transactions, crypto markets, and economic influence. The question today isn't who is J.P. Morgan. It's how many Morgans exist, but in new forms. This is the repeating pattern of American finance. Private individuals control the economy. A crisis exposes the danger. Government tries to create stability. New institutions gain power. They repeat the same concentration of control. Morgan didn't create this cycle. He simply exploited it better than anyone. Today, we still live in a system Morgan-shaped, one where banks create money. Trust determines survival, central authority decides outcomes, crises reshape power, and the biggest players are always the ones who appear at the center, just like Morgan. Power isn't about wealth. It's about position. Morgan wasn't the richest man. He was simply the one everyone needed during a crisis. America's financial system was built reactively, not intentionally. Every major reform came after a disaster. The system evolved through panic, not planning. we are still vulnerable to Morgans. Individuals or institutions today can still gain massive influence when the system fails because dependency breeds power. The story of JP Morgan isn't just history, it's a mirror. Every time we believe the system is too big to fail, every time we place blind trust in central institutions, every time a crisis forces us to rely on a single decision-maker, we repeat the same mistake. The question isn't, could another JP Morgan ever rise again? The question is, has one already risen and we just haven't noticed yet? If this deep dive into financial history opened your eyes, don't forget to like, subscribe, and share this video. We make documentaries revealing the hidden forces shaping money, power, and the world. And if you want more stories like this, from the Rockefellers to the Rothschilds to the hidden history of the Federal Reserve, tell us which one you want next in the comments below, because understanding history is the first step to understanding power.